SAP Fraud Management with HANA. My name is Jamie Draper. I'm a partner with PwC based in San Francisco. I think many of you on the webcast today have been with us before, so welcome back and thanks for supporting this program. To anybody who's joining for the first time, thank you to you guys, and welcome and enjoy today's webcast. So as we start, there's a number of sort of administrative items that I need to go through, so I'm going to go through those and then we'll get into the content. The first thing I need to do is read through a disclaimer. So certain matters reviewed today may represent services that PwC may be prohibited from providing to our audit clients. In those instances, the information is being provided to inform you of options that you may want to consider as you evaluate the solution described on today's webcast. Independence rules are complex, and we recommend to discuss all services with you in advance within the context of the independence rules. The information contained in this document is provided as is for general guidance on matters of interest only. PwC is not herein engaged in rendering legal, accounting, tax, or other professional advice and services. Before making any decision or taking any action, you should consult a competent professional advisor. Moving on to more administrative matters, these are really for your benefit. For better viewing experience, please close all applications. For better sound quality, use headphones. Now some relevant ones. To enlarge the slide, click the bottom right corner of the slide window and drag the desired size, or click the green maximize button. We often get asked whether the presentation is available. It is available, so to download today's presentation, click on the resources widget at the bottom of the screen. Submitting questions, we do encourage everybody to submit questions as you think of them as we go through this webcast. Please use the Q&A window on the left side of the screen. What we'll do is we'll answer questions as we go along. Any questions that we don't get time to answer during today's webcast, we will give you a response. We will follow up and provide that to you. If you experience any technical difficulties during the polling questions, reply to the question in the Q&A window. In the next slide, I'm going to talk about the polling questions and the CPA credit. So today's webcast is eligible for one CPE credit. In order to get that credit, you must stay on the program for 60 minutes. You have to respond to the polling questions. When the polling questions come up, they'll be on screen for 60 seconds to give you time to answer them. You must click the CPE widget upon conclusion of the webcast that's located at the bottom of your screen. You have to do that in order to get the CPE. And for anybody who's listening to this in the archive, unfortunately, CPEs are not awarded if you're listening to the archive webcast. They're only available if you're on the live webcast. As I mentioned previously, if there is an issue with the CPE question, then please just submit a Q&A answer. You just submit a question with option A, B, C, D, E, or what's relevant to the question, and you will get the CPE credit at that point. So moving on to today's webcast. I'm joined today by Elizabeth McNichol, Jamie Levitt, and Mike Heiken. I think for those who've joined webcasts before, many of you are used to myself, being the presenter on this webcast. I have kind of a joint role, obviously. I mean, I'm doing the webcast, but this topic today, fraud management, is one that I'm actually sponsoring within PwC. So it's a particular topic of interest to myself. Joining me on the webcast, as I mentioned, Jamie Levitt, who's based here on the West Coast in Orange County. Jamie, first off, I need to give a personal thank you to. As I mentioned, these webcasts really are sort of the brainchild of Jamie. She helped me pull together the pilot webcast that we delivered and is responsible for sort of driving these webcasts on an ongoing basis. That pilot webcast was on continuous transaction analysis. And this webcast right here is an extension of that and sort of how we're looking at new technology with SAP's fraud management to continue that transaction analysis. Elizabeth McNichol is a director from our Philadelphia office. Elizabeth leads our fraud management initiative within inside the firm. She leads that initiative based on the fact that she's implemented a lot of continuous transaction analysis technology at multiple global companies. And finally, Mike Heiken, who joins us from Boston. Mike is part of our fraud management team and has been responsible for standing up our internal fraud management solution as we build out our solution. So that's who's joining me today. What we're going to cover, we've gone through the introduction. I'm going to hand over to Elizabeth to talk about the business challenge. So we're going to frame up sort of the issues that companies are facing that this technology will help with. Then we're going to talk about transaction analysis, case studies, and return on investment. So we're going to go through some real-life examples of where we've implemented tools and where we've looked at transaction analysis for fraud management and what return companies have got on that. Hopefully that'll give you guys some idea as to how you can best leverage this technology. Then we're going to get more into the technology solution itself. Mike will go through SAP's fraud management solution offering, and then we're going to finish by talking about how you can go about implementing a fraud management program, how you can take this and implement it. Before we jump into the details, one of the things we've been asked on prior webcasts is to go through some of the definitions that we have. So I wanted to just cover that very, very briefly here. You'll hear us refer to GRC. That stands for Governance, Risk, and Compliance. GRC is a generic term used by organizations to look at governance, risk, and compliance programs. It's also the name given by all of the software vendors for their specific tools that address these issues. So SAP has its own GRC suite, and the members on this webcast have implemented that many times. Fraud management is a new solution offering from SAP. It's not technically part of the GRC suite, but it works very well hand in hand with the GRC suite and really is designed to look at fraud, and we're going to go through those examples. HANA, potentially the confusing thing. HANA is SAP's in-memory database. Really kind of what you need to know about HANA is it allows incredibly fast processing of data and by pulling it into memory, and allows you to pull data from multiple sources to be effective there. It's something that's required to use fraud management, which is why we kind of mention it, but we're really not going to go into HANA as a technology in today's webcast. If anyone wants to talk about that, we can follow up later. So with that, I'm going to hand over to Elizabeth to talk about the business challenge.
Okay, thank you, Jamie. So when we talk to companies about fraud and transaction monitoring, there are common themes that we are consistently hearing. So on this slide, we're just going to go through what some of those themes are. So the first theme we hear is that businesses are growing and technology is also maturing. And we live in an age where we commonly hear, or you may have heard the term, big data. And so data can live in numerous systems that can frequently reside in numerous places, right, either geographically or just system physical places. The data can also be inconsistent between systems and transactions, making it difficult to draw relevant and accurate comparisons between data. It's also a challenge to make sense of so much data and to make sure that the data is relevant and appropriate for whatever the analysis being performed is. So essentially, am I looking at the right data based on my analysis? Another theme we hear is that businesses are often decentralized and destandardized. So this can be the result of mergers and acquisitions that can increase data complexity. Companies can't implement a one-size-fits-all process related to data, and preventative controls that are leveraged can sometimes slow down business processes so that there is a need to be able to inspect data from a detective point of view. A third theme that we commonly hear is that businesses are also leveraging outsourcing to drive lower costs. And so this kind of reliance on outsourcing places increased reliance on either third parties or potentially centers of excellence that can be located in different regions, and controls that can be outsourced to those regions or those third parties, even when the responsibility for that control remains with the core business. And so that can lead to challenges in maintaining the appropriate level of oversight for the company. Okay, so the next slide. On the next slide, we can see a diagram, and the diagram depicts how we can start to leverage new technologies to address business challenges that we went through on the previous slide. So if you look across the x-axis or the top of the chart, you'll see different categories of control types. We've got preventative controls, automated preventative, and commonly the automated preventative controls are SAP configuration related. Then the next category, we've got real-time detective controls. And these controls often rely on transaction monitoring type solutions. And then lastly, we've got the preventative controls. For example, the review of a specific type of report or a reconciliation. So if I read down the y-axis here on the left side of the chart, you'll see the types of controls, the types of technology, and the frequency or level of effort involved in each of those categories. So if you go back to the top and we look at the preventative controls, you'll see that from a technology standpoint, other than some SAP workflow, you're not heavily relying on technology to support the controls performance. As you move across the top over to the automated preventative, you're starting to rely on things like SAP configuration and the GRC suite of products. And as you continue on to the near real-time detective control solutions, GRC and specifically tools like SAP Fraud Management become critical in the evaluation of those controls. Additionally, if you consider the level of effort involved in the performance of the various types of controls, and you can see that at the bottom of the chart here under frequency, clearly the automated preventative and the near real-time controls deliver the lowest level of effort combined with the highest percentage of overall control coverage, and that's being at or near usually 100%. So they really provide a comprehensive control coverage standpoint. Okay, and now I'm going to hand it back to Jamie to go through the next question.
Thanks, Elizabeth. As I mentioned before, here's the first of our polling questions, so hopefully everybody can see that on the screen. What type of software do you use to analyze your data to look for anomalies? A, Microsoft Access or Excel, B, ACL, C, Process Control, D, Oversight Systems, E, Fraud Management, or F, Other. And as I mentioned previously, if you have trouble answering the question, please just submit an answer in the Q&A and you can still get the CPE question. So as I said, we need to leave this up on the screen for a minute. In the meantime, I'll just answer some questions. We did have a very quick question come in about what does HANA stand for. SAP now just refers to HANA as HANA. It's just a name for their in-memory database. You will see it referred to as, it used to be called something called high performance analytical appliance, but I really wouldn't get caught up on that. It's just HANA is their in-memory database. Another question, and I'll shoot this over to Elizabeth. In our experience, how many companies effectively use technology or SAP's technology to perform continuous transaction analysis?
Yeah, sure. So we're definitely very commonly, and I would say even pervasively, seeing the use of SAP's GRC suite of products being used in the automated control space and also in the security space. And I think now that companies are pervasively using that technology for automated controls, they are starting to use them also for transaction monitoring, and I would say kind of, pushing into that category of control performance. So I think that these tools are starting to be leveraged in ways, I'll say creative ways, where they haven't been used in the past, and this is, I would say, aggressively happening at most of the clients where I've implemented GRC technology. Okay, thanks. I'm going to post the results, so hopefully everybody can see there that the results.
it looks like the predominance of people are using Microsoft Access, Microsoft Excel. I think that's sort of pretty consistent with what we see, and we're going to actually get into a little bit about sort of how companies can leverage this technology. I mean, right, and at the end when we talk about a sort of program of how do you go from your current state, which is probably sort of informal, using those types of technologies to look at things. It is nice to see that a few folks have got some of the more structured systems in place as well. So moving on, I'm going to hand over to Jamie Levitt, who's going to talk about some of the case studies and what the return on investment we're seeing from this is.
Thank you, Jamie. So I'm going to go through 2 case studies with you. These are case studies that basically are transaction analysis case studies, things that we've delivered on clients, which would be enhanced with the fraud management solution, something you could do there. So first one is a large government agency. So in the government, there was some legislation passed where it was mandated that certain procedures and safeguards were put in place over improper payments. However, improper payments probably apply to any company. You don't want improper payments going out the door, something that's fraudulent, duplicate, that you shouldn't be paying. So for this organization, they had a problem dealing with improper payments for 2 main reasons. One, they were basically at capacity just doing their job, just processing the normal business transactions. And 2, they actually knew that improper payments were going out the door. They would get calls from their vendors and payees from time to time saying, you just sent me an extra check. So they contacted us to put in place something to try and help them find improper payments themselves timely with low overhead as transactions were happening. So what we did was we implemented a continuous transaction monitoring solution that really enabled the layering of some high-powered analytics on top of each other to find more true business anomalies. For example, we started saying, okay, let's start highlighting any time a payment is made that's outside the usual, so more than a certain amount of standard deviations over the average for a payee or a vendor. Anytime you're putting a purchase order in the system that's outside the norm. When you have more than one payee or more than one payment to the same vendor or payee in the same period. When a vendor's bank details are changed and then changed back, a lot of times vendor bank data is quite sensitive, but vendor bank data should change. So trying to look for more of when it would truly be an anomaly. Anytime payments were placed into the system where they were being scheduled to be paid, but they weren't taking advantage of discounts, the 210 net 30 type discounts. Duplicate or fake vendors. So this was where we could look to see if we had, multiple vendors with the same address or vendor addresses matching employees, things of that nature. So what happened was when we put in these types of analytics, and those are just some of the examples, we were able to get quite some good ROI for the company. Actually, within the first 60 days of implementing the solution, we returned 9 times license and implementation service fees because we were able to identify transactions that equated that much in vendor improper payments that they were able to return. So the solution also allowed them to find root causes. They were finding the transactions as they were going out, so within the week that they were processed. So they were able to go and talk to the payables department about why these things were happening and start stopping them, so implementing more preventive processes. They were also able to trend things to find out if outside organizations were causing these issues. They were able to evidence controls so that they could show that this came out of government legislation. So being able to put these things into a continuous transaction monitoring solution to show how they were monitoring things and how they're investigating them enabled them to prove that they were putting these safeguards in place. They were also able to identify gaps in current processes, new ways things were being processed that were bypassing what they thought was controls. And lastly, one of the things that we typically see with detective reviews is you have some sort of central gatekeeper who's responsible for finding the exceptions and doling them out to the right business units in order for them to investigate. Well, what we did was we actually put workflow in place so that it was based on organizational data, like what company code the payment was from, and things of that nature, so that we were able to make it really dynamic, so that it would go to the appropriate business people for follow-up as it came through. There was no more central gatekeeper, so it saved a lot of time for the business. So I think we have a poll question. Jamie?
We do. So the next poll question that we've got to go through, do you think your FCPA efforts are enough? So looking at your current your current program around the Foreign Corrupt Practices Act, for anyone who doesn't know what FCPA stands for. Option A, FCPA is not a big area of focus. Option B, it's an area of concern for us now. Option C, we think we're doing enough but would like to reduce the effort and cost. And option D, we are happy with our current approach. And whilst we're allowing you time to answer that question, a couple more questions that have come in on the Q&A. I'm going to do a couple of very quick ones. A question came in as to, this was back on slide 8, whether ACL referred to audit command language. Yes, it does. It refers to the tool. We also mentioned another non-SAP tool back there called Oversight that does the same kind of thing as SAP's Fraud Management. There are other tools on the market that do that. Question about HANA, whether it's used in conjunction with an ERP and what the difference is. Yes, it is. I mean, HANA effectively would replace the Oracle database or the SAP database or work in conjunction with that database without going into too much details on the technology of HANA. But as I mentioned up front, what it really does is it puts the database into the memory of the computer so that you're not writing and reading from a hard drive somewhere across a network, so it really speeds up processing. That's, in effect, the simplistic way of describing it, sort of how I understand it. And then a question, I'm just going to throw this over to Jamie, a fairly quick question. What was the tool that you used for the payables transaction analysis?
That was actually with Oversight Systems.
Okay, great. So to look at the response to this question that we just asked, it does look like most companies are starting to focus on FCPA, although there's quite a lot of companies that it's not a big area of focus. That doesn't surprise me too much. I mean, I think we've got a mix of companies on this webcast. Some of them are just based domestically, so are not going to obviously need to abide by the Foreign Corrupt Practices Act. But those that do operate internationally, it is a big area of concern. There are huge amounts of fines that come associated with that. And then, not surprisingly, everyone would like to, or most people would like to reduce their costs somehow with this. But good that a good few people are happy with their current approach. So with that, I'll move it on to Jamie so she can talk about the next case study.
Perfect. Okay, so that was a good interlude. So what I'd like to talk about next is actually FCPA. It's a bit different than our process-type transactional monitoring that we just talked about. So FCPA, for those of you that don't know, is the Foreign Corrupt Practices Act. And what this entails is basically the Department of Justice can fine you if you have bribes or frauds or other corrupt-type activities happening in countries where you do operations. So causes a big problem for multinational companies, especially that are based in the U.S. So one of the key things that's part of FCPA is transactional auditing. You have to have all this framework in place, to ensure a good tone at the top and ensure you have, proper things about how you engage with vendors and train people not to do bribes, things like that. But also, transactional auditing is something that you have to do to prove, even though you have this framework, that you're looking into what's happening, especially in high-risk areas. So here was an example of a client. It was a PwC client, actually, where FCPA was a key area of focus for them. They historically actually relied on us to help them with their FCPA audit. What we would come out is we'd come out once a year and we'd go and pull all this data from SAP and use analytics to basically identify more at-risk transactions so that they went out to the different countries, like Nigeria, Brazil, things like that. They could actually look into these transactional audits with a pointed, very focused point of view, because we'd basically go out and say, we're going to look at all your journals, and we're going to say, here are the ones that we think are most at risk. So this cost quite a lot of money, because what would happen was we were doing this service. It was something that wasn't repeatable for the company in-house. So in order to reduce the effort, what we do is we do it once a year, and we do it for all the countries that they wanted to audit that year, and we'd give them these files so that they could go out and perform these audits. This allowed them to reduce the cost a bit, but as they were performing the audits throughout the year, the data became quite not timely. By the time they got to December, we ran the reports in January. When they were going out to that country, it was almost a year old what they were auditing. So they wanted a solution where they could actually do this in-house, so that as they went out to a country, they could run the data and have it ready right then, and also so that they didn't rely on us so much to perform these, analytics and put together these big reports for them. So what we did was we implemented a continuous transaction monitoring solution with a bit of a twist. Instead of finding transactions as they happen on a daily basis, it has a covered period solution. So basically what they can do is they can say, for this country, for this time period, right before they go out and audit, and then run it, and it will find all of the at-risk transactions for that time period. So it was quite nice because it uses the really high-powered analytics, but it will only look for what the company's prepared to go audit. So it reduces the risk that they're going to find exceptions throughout the year and not be able to go out and investigate them. So the tool allowed them to basically evidence results of the audit. It had a workflow so that you could ensure you had quality review of the audit. We had, set up things so that the auditors and then the audit managers reviewed the steps and signed that off in the workflow. Got rid of the spreadsheets they used to keep and store on shared drives, and allows attachments so that as they investigated things, they could actually put them into the tool, put attachments on how things were closed out. And the other thing that was really nice about the tool was that it allowed reason code categorization. So if they found true exceptions, they could determine what they were really coming from. So this solution gave quite a lot of ROI to the company. Probably first and foremost, it got rid of the need to use us year on year, so it reduced the fees that they had to pay us annually. So that was really nice. It allowed them to do more timely transactions for audit so that they could ensure that when they were going out to these countries, it was quite timely. Lowered the cost and effort to document the results. So it was a central queue, so at any time throughout the audit, you could actually go in and start looking at what your teams had been doing and how things were closed out to check as an audit was actually happening, how it was going instead of waiting till the very end of it. So the dashboarding, enabling results, and trending of reasonings for FCPA, they actually have some dashboards so they can start looking at what's happening in specific countries, what's happening globally. And then lastly, this really helped prove so that if for some reason they ever get in trouble with the Department of Justice, they can say, look at our framework, look at our transactional audits. Here's how we evidence how we do all this, due diligence around transactions in these countries to really prove that we're taking FCPA seriously, and if there is an issue that was found that it's really an anomaly, it has, the company's put in all the safeguards to really stop that from happening. So now I believe we're going on to another poll question. Jamie?
Hi, yeah, so everybody who was paying attention on the webcast, we jumped over a poll question. So the question number 2, the one that we're going to go to now, relates back to the payables and the recoverables. Do you use recovery firms to review your payable process? A, yes, they typically find next to nothing. B, yes, they charge us a fortune, we want to get rid of them. C, yes, they are effective. Or D, no, we don't use recoverable firms. And whilst we're allowing this question to process, Jamie, there was another question that came in related to this topic to do with payables around whether the 9 times recovery that we managed to achieve, whether that involved false positives or if it was 100% of actual errors.
Yeah, so with any of these solutions, we actually are finding false positives. You'll find them as a result of you're looking at abnormal transactions, and typically companies, even if you know what's abnormal, some of those abnormal transactions are going to be valid business transactions. So what we did as part of the tuning was we really, when we developed these rules, there's quite a few analytics in them, and you can tune each filter to really ensure that you're only finding more true abnormal business transactions. So the ROI that is the 9 times license and services is actual money that they got back. So that was a true exception that they found within the first 60 days that they were able to recover from the vendor. We actually found some other exceptions there dealing with actually DBAs doing things with vendor bank accounts where bank accounts were changed and changed back, which aren't part of that ROI because there's no monetary value there. So there was quite a lot of other things that were found there. That was just kind of the first 60 days proven that we could get back. So.
Okay. And then another question that I do want to just touch on before we move on that's come in. It's around the same topic, a little bit more general than just the payables process, but what is the percentage of false positives that you would see assuming the rules are well defined? I don't know that there's a specific answer that I have to that. Obviously, the intent is to reduce the number of false positives to the minimum, but Jamie, what's your sense on that?
Yeah, it depends upon what you're looking at, really. Normally, we try and tune it down so that it's below the 50% mark. And then it also matters on how quickly it's easy to dismiss transactions. So when we go through the building of the rules process, there's a lot of tuning that happens, and we actually sit with the business quite a lot. We'll get what you'd like to look at, how does your process work? We'll go away for a while, we'll build things, and we'll say, okay, this is what we came up with. And that allows us to go through a couple rounds of known false positives to get rid of them. However, if you are finding something where you only find 20 transactions a month, but they're big transactions, you might have a higher tolerance for false positives in that population because the amount that you could return is so much bigger. So it really depends on the volume and what you're trying to catch. If you've got a lot of transactions, you might actually be missing true positives because you just want to make it manageable for the business. So it varies.
Okay. So I posted the results to the last poll question. A clear majority of people don't use recovery firms. Within those that do use recovery firms, it does seem that the majority, just slightly the majority, are happy with them and that they're effective. However, almost the same amount seem to be using them, but they don't find very much. And then a smaller number there are using them and finding them very expensive. So with that, we're going to move on, and as I mentioned on the agenda, we're going to talk about the solution offering, and I'm going to hand over to Mike Heiken, who's going to walk through the technology.
Thanks, Jamie. Wanted to talk briefly about SAP's solution offering, and in order to do that, I want to put it in context of how it can help with some of the more common challenges we see when people try to do these types of transaction analyses themselves with say the tools that we see the majority of users using, be it Access, ACL, Excel, etc. So we see three broad categories of difficulty: identification, follow-up, and dashboarding. So let me walk through each of these very briefly. In identification, we often see that with the current tool set, individuals find it difficult to find meaning in data, and oftentimes this is due to a lack of sophistication in analytics. Sometimes the tools that you're using just don't have the power to either get through the quantity of data that you want to get through, or to do the type of analysis that might be warranted for a particular population. Next, data isn't centralized. It's all over the place. And in most companies, you don't have one central spot for all of your sort of fraud-relevant data. It could be in legacy systems. It could be in SAP. It could be in Oracle. It could be in a number of different places. So we often find that it's challenging to centralize that data and analyze it as one. Next, too many exceptions. We've talked about this, I think, a bit to date. False positives is obviously a very key problem in this process, and we want to minimize that. Most of the results we find people end up getting from lower-level tools tend to be not worth looking at, unfortunately. So moving on to follow-up. The challenges we see in follow-up are how do you efficiently sort through your exceptions? So when you have reduced that population down to an acceptable number, how do you get through them, and how do you get the follow-up actions to the right people? And once you've done that, how do you keep track of what you've done, and how do you know what the cause of the problem was and how to fix it? These are all sort of after-the-fact type of activities. It's really important to get all these things right, because otherwise you're really not getting any benefit. You're just finding things. You're not really doing anything about it. And lastly, we'll talk about dashboarding. So for dashboarding, what we're really trying to touch on is how do you demonstrate the value of your efforts in fraud detection, and how can you take a step back and find trends in your findings such that you're fixing broader issues, things that are process-wide, location-wide, that type of thing. So moving on to the next slide, if I can get it to the right next slide, apologies. Let's just take a look at the solution itself. Now, this is a diagram from SAP. And what you're seeing, just some key points here. On the bottom left, connectivity. SAP's fraud management tool is very connectable. It has the ability to connect both to SAP and to non-SAP systems. On the bottom right, more connectivity, this time to SAP process control and risk management. So the fraud management tool has the capability to pass issues into process control and fraud management to work through those things through your current workflow that you have established for your broader compliance function. In the middle, the key to the power, I think, of this application is that it runs on SAP HANA. HANA, we discussed a bit previously, is SAP's in-memory computing appliance. It's super fast. There's lots of analytical horsepower. It's what really enables fraud management to get proactive in fraud. It enables sub-second responses on giant data sets, et cetera. And last but not least, this is my favorite part about fraud management, and I'm sure it'll be everyone else's too once they see it. Fraud management from SAP is mobile-enabled, which means that you can get your results on the iPad. Fraud management has a native application that lets you interact, dashboard, et cetera. This is something I think that's quite compelling, quite impressive for your executive community to really prove, what exactly you're getting in terms of benefit out of your fraud detection efforts. So next, let's talk about the solution in a little more detail. We'll get into some functionality here. So to start, what we're seeing here is a dashboard from the fraud management tool itself. And what I want to impress upon you in looking at this is that fraud management at its core is a detection engine. What that means to you is that it uses complicated, layered analytics to allow for smarter detection efforts, and this means that you'll get better results. So we were talking about the challenges before and not getting sophisticated enough analytics, but fraud management has sophistication in spades. What that means is, with these higher-level analytics, you have the ability to get more targeted, to get smarter about what you're looking for, and in turn, you get more meaningful results for your business. This should increase the return on investment for your efforts. Another part of the detection process in the fraud management tool is the risk scoring process. So what that means is you have the ability to provide scores based on different factors in analytics and fraud management. So you can say, if I want to prioritize things that are of high value, I can do that. Or if I want to prioritize things that are of higher likelihood of being fraudulent, whether they be big or small, we have the ability to float those to the top of your queue. So you're getting at the things that you think are most important first. And this is something that we would recommend, of course, in order to get better yield out of your fraud detection or error management type of processes. Next, what you're looking at is fraud management's opening alert screen. And in looking at this, we want to think about and talk about fraud management's workflow. So notifications are a central part of fraud management's workflow, and this is really a stumbling point for a lot of organizations. They'll get the detection part right sometimes, but then you move on to the execution is not quite so good. So in fraud management, again, it's a notification-based workflow. Because of HANA's speed, you're getting items, especially from SAP, at or near real time. So when a transaction is processed and fraud management has the ability to inspect it, if it's potentially an offensive transaction or an exception-type transaction, that can drop right into your queue and you can look at it immediately, get notified immediately. This is something that can allow you to get in front of payments before they're processed, get in front of sales before they go out the door, et cetera. Another thing to think about with fraud management is that routing is extremely important. You want to get things to the right people at the right time. And SAP's fraud management tool is set up to know your organizational structure. When you implement it, you are telling it, who's in what organization, where things should go based on the type of exception that you're seeing or finding. It allows you to get things to the right person at the right time, and that allows you to remediate issues faster, to react faster. And this is extremely important in trying to catch things, because once things have gone out the door, it's hard to get them back. Another factor to think about here is escalation. So again, this is something that if you're using workflow to manage sort of a cadence of fraud detection procedures, oftentimes you'll find that there are people that just don't do their job. So escalation is built in so that you have the ability to root out anyone who isn't doing their job, and you have the ability to follow up on things that are long outstanding. Let's talk a little bit more about the user interface. What you're seeing here is the fraud management alert screen. 3 quick points here. First, I think the best part about using an SAP product when you're an SAP customer is that you have the ability to jump from fraud management and SAP right into the SAP transaction causing exception. So you jump from tool to tool without any problem at all. This, I'm sure for people who are SAP users, is enormously helpful because you don't have to go into the system and search for a 9-digit document number or what have you. Second, root cause analysis. As you can see in the sort of investigation reason field on the screenshot, root cause analysis is something that can help you simplify your efforts in seeing the big picture. When you're categorizing things, it allows you to more easily pick out systemic problems in your process, in your locations, et cetera, so that you can go out and fix those problems and make it such that they don't happen anymore, that you're not continuously following up on the same exact thing. Lastly, this isn't depicted in the slide, but audit trail and tailored work plan. So, of course, any type of fraud detection tool, you would expect it to have a pretty good audit trail. Fraud management is no exception. It has the ability to show who's touched a record, who's made inquiries, who's passed it on to another person, et cetera. You've got the whole flow of the transaction from the identification of the exception through complete remediation. And you also have the ability to tailor that work plan for either high or low risk items. So you can have sort of a high risk work plan that goes through many steps, that goes through a number of people just to make sure that you get the remediation of that item absolutely right. And for a lower risk item, if you don't want to spend quite as much time on that, you have the ability to sort of truncate that effort and move on if you feel that you've got enough with a little bit of follow-up. Next, this I think is one of the more innovative aspects of the tool, and that's the calibration engine. So something that required typically a lot of coding or changes in other tools, fraud management has made quite a bit easier, and this I find quite exciting. Here, what fraud management is allowing you to do is to change parameters in your detection routines graphically. So to give an example of what you would be doing here, let's say, just for a very generic example, let's say that you have a detection routine that is looking for purchase orders in whole amounts. And let's say that detection routine is looking for things in whole amounts above a value of $20,000. But that detection routine is giving you a great many responses or results, too many to look at. And so what you want to do is you want to raise that threshold so that you're getting fewer things, but you're getting sort of perhaps more valuable things. Well, you would be able to go into the screen in fraud management, change a slider, move that value up to 50,000, and in the pro forma analysis, it would tell you how many items you would get today if you were to change that value and make it permanent. So what this allows you to do is to manage your workflow, or your workload, really. And it also allows you to make these changes without any type of coding, any type of IT involvement. This is all happening in the front end. I think that's truly innovative because this is something that often takes quite a bit of time. This also helps you keep your detection routines fresh. You should be changing these values, these parameters. You should be thinking about your analytics periodically to tune them, because after a certain amount of time passes with some of these detection efforts, your user community gets wise to what exactly you are looking for. They see what you're following up on. They say, okay, I'm being held to a standard of anything above. They're looking at everything above 20,000. Well, I'm just going to stay right underneath that 20,000 threshold. Well, this allows you to go just below that 20,000 threshold and catch people that are, again, playing games with the system. It keeps everyone on their toes. And lastly, I want to talk about dashboarding, and this is a place where I think the solution really shines. As you can see, we looked at a dashboard previously, but this is another one that I think is quite compelling. What this is showing you is the dashboards in the tool are extremely advanced. They are allowing you to address the point we discussed earlier, which is how do you quantify the value that you're providing with the system that you're putting in. So executives can get into the system. They can see what's happening across the globe. They can see what the program is worth to them over time. And it really gives an idea of how well your compliance efforts are controlling things. The other thing that you can do with this that I think is really interesting and quite different from the other products that I've seen on the market is that it has the ability to analyze data and perform high-level investigations. So not everything has to go through workflow. You can do a one-off analysis with this dashboard just to do a high-level type of investigation. And this is something I think Jamie mentioned that her clients have asked for. I know my clients have been looking for a solution like this where you don't always have to have that workflow rigidity. Although you do have the option, you have the ability to go ahead and use that. So with that, that's our brief summary of SAP solution offering for fraud management. So let me send it back to Jamie for another quick CP question. Jamie?
Yes, thanks, Mike. So the fourth question is whether or not you're thinking about implementing SAP HANA. And there's been some great questions come in on the Q&A, so please keep those coming in, and I'll cover some in shortly. The options we've got here: A, we have an enterprise license, so you're already using HANA. B, we're currently looking into a license. Or C, we've not started looking at it yet. As I said, a lot of great questions coming in. If we don't get to your question, we will reply back to you. A lot coming in with regards to fraud management and HANA. Fraud management does require HANA to run, so you can't just put it on top of something else. And Mike, correct me if I end up saying something that I shouldn't say here. Another question about, is it part of the GRC tool? I think it's probably going to end up part of the GRC tool. Right now, we're tending to look at it as separate to the GRC tool. Bottom line, and a few people have asked this, particularly regarding cost, it is a separate tool that requires a separate license from the likes of access controls, process controls, risk management. So if you have a full GRC license, it won't cover fraud management. It would be a separate license. With regard to costs, we don't resell. You need to talk to your SAP account exec as to what the cost of that would be for you. So hopefully that's answered some of the broad questions about GRC that have come in. the question, and I'll throw this over to Mike, a couple of questions have come in around this. Who typically owns the tool? Who typically looks after it in an organization?
So it can be owned in a number of different places. Oftentimes I see an internal audit organization sort of owning the periodic fraud detection type of efforts that are run. In other circumstances, though, a tool like this can be owned by, say, the procurement department or the compliance department, depending on the purpose that they're putting it in for. So you're really putting this in to comply with FCPA. That may be driven more by compliance. Let's say you're putting this in to control payables to make sure that things aren't going out the door inappropriately. That may be something that lies in the procurement function.
Great, thanks. To look at the poll results, the majority of people have not started looking at HANA yet, but a good number of people do have an enterprise license, which is great. There was a question that came in that if you're using HANA for something else, can you leverage it for fraud management? Absolutely. You only need to implement it once to be able to leverage it from a licensing perspective. So you can do that. So moving on, I'm going to hand back to Jamie, who's going to talk about the roadmap on how to implement this and how to think about it.
Thanks, Jamie. So it basically, just to give a quick overview on how we would deliver an effective solution, taking a stepwise approach. Step one is, first you want to identify the areas that you're concerned with. So where do you think fraud and error is occurring? So areas to target there would be if you have FCPA requirements for transactional monitoring, areas of known inefficiencies, errors, if your vendors are calling you saying, hey, you just paid us twice, that sort of thing. Any area where you know you can't control things preventively because of your processes, that might be a good area to highlight for transaction monitoring or transaction analysis. Destandardized, decentralized processes, those are normally highly prone to fraud and error, and areas where preventive controls cannot be implemented or manual controls are heavily relied on. So there's a couple keys to success when you're thinking through how you're going to implement a continuous transaction analysis program. One is don't try and boil the ocean. A lot of times companies might come out and say, I know we have issues in our payables process and with journals and with vendor master data and inventory. Trying to go after everything at once, it's too much organizational change. So what you want to do is you want to say, where is my most key area of risk? Let's focus there and let's start with that. Let's have a pilot for that process. Then also within that process, don't try and overhaul the whole entire payables process. You're going to have a lot of things you probably want to look at in certain processes. Try and pick the key areas of focus, 5 things that you want to look at. That'll help focus the continuous transaction analysis. It'll help ensure that you're able to refine things properly. And then as your business starts going and dealing with the exceptions that you're generating through these tools, you can actually embed those processes because you're getting meaningful, focused, abnormal business transactions. So really try and keep it small. This also helps if we do a focused one process and the most important things in that process, that enables us to get buy-in because we're able to most likely find more true ROIs within our company so that we can show to other business units, hey, this is what we found here, instead of, believing a business case from another company. I know it resonates a lot better if it's your actual return. So the other thing is it supports a rapid prototyping approach. So every company is different, and as you roll out new technologies, the things that help make it a successful project really vary. So if you kind of get all the bumps out on your first project that's really focused where you already have, some business buy-in, it helps you get the other business units on board when you roll this out to the other processes. So to 2 is consider your current processes. So this is really critical. You need to really understand your environment on the whole. You need to understand what your preventive processes are, what your detective processes are. If you don't understand that, you won't be able to fine-tune the things that you want to look at. You also run the risk of enabling these continuous transaction analysis rules that will actually be redundant to the processes you have in place. So whenever we look at preventive and detective processes, you want to make sure that you weigh what makes most sense for the process, and that you really ensure that the detective processes augment your current preventive processes. If you remember from the introduction, we went through the business challenge, the slide where Elizabeth was going through all the control types. Preventive processes are great because you can implement them, they stop things from going through, and they're really low cost. So we would like to maximize the use of preventive processes wherever possible. It's using these detective processes in a meaningful way to augment those preventive processes or to, catch gaps that you can't prevent. So the next thing that we need to do is implement the fraud management rules. So we know what we want to look at. Then we need to figure out how we want to look at. So this is where we're saying, okay, I want to identify improper payment. So let's try and say, what makes an improper payment? What are the types of things that would identify that sort of abnormal transaction? Trying to group them in a transactional way so that you're looking at all purchase orders at the same time or all payments at the same time. That'll help you be able to save your business time. So you want to layer analytics that help you find those problematic transactions. Also, by layering analytics, it'll help you assign risk ratings to each rule, and then that'll allow you to score transactions. So you could actually say this payment is more likely a true issue because it met 5 of our criteria or, 3 of our criteria, whatever it be. And you can actually assign different risk scores to each. So maybe some of the criteria that you have out there, maybe every single time you would see that, it's definitely an issue. So maybe you give it that a really high confidence, So those sorts of things really help. So, and also just remember to focus initially on a small number of well-designed and defined analytics here. The next step is you need to establish your process to evaluate exceptions. So this is really where, how does your business deal with the exceptions? How does it deal with false positives? How does it deal with true exceptions? So who is going to be following up on the alerts? How does your workflow work? How do you ensure that people are actually clearing the alerts? Those sorts of things on how you establish your operating model for how you use these rules. And lastly is really, once you have your workflow in place where you're making sense of what's coming out of fraud management, then you need to use that information to strengthen your environment. So as we find true exceptions, that type of information should go back in and further enhance your preventive processes to make sure your environment matures and you get less exceptions over time. As you find false positives, again, use the calibration tool to basically make sure that your rules are being streamlined to make more sense of them. So I believe we're on to our last poll question.
We actually don't need to do a final poll question because we're in the allotted time frame. So I'm going to move on to wrapping this up. At the end of the presentation, you'll see our contact details. There are a couple of questions I'm just going to cover very quickly, and then we'll finalize. So a question came in about how many sort of pre-configured rules that come with fraud management, or whether it's just an engine. It really is just an engine right now. What we've done, what PricewaterhouseCoopers have done, we've taken our IP from like our forensics practice to look at FCPA, and we've built our solution that we're bringing as an accelerator to the market to combine with those tools. Another question, and if you can answer this very, very quickly in 30 seconds, Jamie, quite a few questions come in as to the difference between fraud management and other tools like ACL or oversight. Yeah,
a lot of it comes down to there's actually differences on many different layers. So it depends upon the way you configure these tools is very different, and the way they actually load data from your instance. So HANA uses what is it called? I can't remember, the in-memory computing, so there's no need to pull things out from SAP. Oversight, for example, actually has an extraction layer, so it pulls things off SAP so that you don't have any stress on your production environment. So things like that are more architectural. Then there's other big differences when you're looking at the user interface, what types of things it can do, the look and feel. For example, like comparing Oversight to ACL, Oversight has historically, because it was built up to be a business-facing tool, it has really good user interfaces where it pulls in the data from the source transactions. So instead of logging back into SAP, you can see all the different things when you're investigating maybe 2 potential duplicate payments. With fraud management, you're in SAP, so you can actually jump into the SAP transactions directly from fraud management. ACL, I believe it's a bit less all-encompassing. So there's things like that. But I would encourage, if you are considering these solutions, to really demo it, because depending upon what you're trying to do with them, different tools might suit you better.
Great, thank you, and thank you, everybody. We're at the top of the hour, so I'm going to wrap up. What you see on the screen right now is our upcoming webcast. If you do want to hear about something different than you're seeing on here, please shoot us an email. We're more than welcome to take any feedback on this webcast and other webcasts. The next one that we have coming up is on September the 24th, to talk about identity management solutions and how they integrate with GRC. And then in November, we're going to be running one on journal entries, just to help the PCAOB and their interest in that topic, because we're seeing a lot of demand and a lot of attention being focused there. So thank you very much, everybody, and I hope you have a great day. Thanks.